Hey folks, Bruce Winder here, retail analyst, hope all is well. I thought I'd do a short video on Gap Inc.'s Q4 2025 results. I also published a Substack and a LinkedIn post on it if you want more details. So overall, the company had a pretty good fourth quarter. If you look at the results, they posted net sales of $4.2 billion, which was up 2% year over year, and their comp store sales were up 3% for the quarter. If you look at very different story by banner, three of the four banners did pretty well. One of the banners didn't do that well. Old Navy posted sales for the quarter of 2.3 billion, up 3%, and comps are up 3%, which is pretty good. Gap had a pretty good quarter. They came in at 1.1 billion in sales, up 8% over last year, and their comps were 7%, which is pretty impressive. Banana Republic, a smaller division, about 550 million. They were up about 1%. Their comps were up about 4%. The problem right now is Athleta, which is a $350 million division in the fourth quarter. They dropped 11% in net sales and their comps were down about 10%, so not good. If you look at their consolidated margins were pretty good, SG&A was pretty good. EPS for the quarter, earnings per share for the quarter came in at 45 cents versus 54 cents. So some struggles on the profit line for sure. The full year came in at about 15 billion, 15.4 billion. So respectable. When you go through their balance sheet, looks pretty good too. Lots of cash, generating lots of good cash from operations. CapEx is healthy. Repurchasing shares, dividends, and management commentary really talked about a few things. Talked about how they're trying to turn around Athleta. Talked a bit about the other three brands, and they went through the transformation process. So they're in phase two of their transformation. The first phase was fixing the fundamentals. The second phase is building momentum. And they're actually going to launch more in the beauty space and the accessories space. So that should be interesting. As well as something called Fashiontainment, which is sort of a mix of pop culture, movies and franchises and fashion. They got a new loyalty program they launched called Encore. And of course, they're investing in AI like everybody else. Their share price dropped a little bit after the earnings were announced, dropped by about 13.5%. Over the last 30 days, it's down about 18%, but up about 9% for the last year. My commentary is I like what I've seen so far. It's still early days. They've still got to show, a continued sales growth and profit growth and unit growth. But they're making, the first step, which is growing top line. The only thing I worry about is a little bit of the average unit retail. So that increased in doubt, no doubt because of inflation from tariffs. But I'd like to see some unit growth as well there and earnings growth, like I mentioned. But overall, things are looking pretty good. And I think I'm looking forward to seeing how they do this year.